Well, hey folks, welcome back again today. I got a lot of sleep last night, but I still look tired. So today's channel, what we're going to talk about is mortgage rates, what the Federal Reserve is expected to do, and did you realize they increased the loan limits that you're allowed to get? So I'm going to discuss all this in the context now. So let's get to it. Here's mortgage rates. I want you to focus in on something. Look at the 30-year fixed rate right now. Where is it? Okay, but I'm going to kind of trick you on this 1 second. Pay attention to it, and that's it. We're going to move on right now. And here's why I wanted to discuss this. The Federal Reserve has one last meeting for 2022, and it's coming up next week. We'll have a live event for that, so we'll walk you through what they're going to do and why they're doing it and so forth. But the expectations are they're going to raise rates 0.5%. And then next year, they're going to meet in January. And now that's where it kind of gets a little foggy. But I think all the analysts right now are saying they're going to raise rates 0.5%. So I think that's built in the markets right now. I don't think we're going to see any really major changes anywhere or major jumps in mortgage rates. So that's what we're expecting. But I'm going to bring you in live next week when the Federal Reserve now announces all this stuff. But what we want to really go over right now is builders. If you're looking to buy, or you sat on the sidelines last year and you're like, I'm waiting for this crash. I don't think you're going to get a crash, but you're going to get a nice little correction on things. But I wish you would have bought in 2021 if you had the ability, because you would have gotten a rate at 3% and you got a discount on your house of about 30 or 40%. So, but if you haven't done that, that's probably why you're watching the channel. Let's figure out a good time maybe for you to at least dip your toe in the water, because I'm going to give you an idea where rates are going, and we're going to also focus in on housing supply. Okay, I'm going to look at it that way, housing supply. So right now we see builders, they're giving more price cuts and incentives. That's great news for those out there looking to buy a new built home, but this doesn't really help on existing homes. But this at least tells you that home builders are starting to cut some prices. Is it 2008 again? Are they going to just start giving away houses? Well, let's really dig into this equation. So the first thing we want to look at is right down through here. This chart tells us how many builders are starting to cut prices. You're going to see right here on your screen. Not a lot. Okay, we're not even at 40% yet, but I think this is going to go up just a little bit more, probably to about 50%. But this is how many companies are starting to cut prices. Well, how dramatic of price cuts are you going to see? Well, if you watch mainstream media and a lot of YouTube channels, they're saying, oh my God, it's going to be 50% or more. Well, how much is it so far? Well, if you look at this chart, so far the average is a 6% price cut. Okay, with 40% of the builders out there. So it's not as bad as a lot of people are making it sound. Could it get worse? It might. Could it get actually better? It might get that as well. It depends on what mortgage rates do and what the Fed does. Okay, so that's that piece of the equation. So are we going to get basically a crash in home prices? I don't see it on the new construction. I don't even see it on existing homes, but only time's going to tell. Okay, so that's that. The next thing is home loan limits. They just increased the amount of money you can get when you're borrowing to buy a house in today's market. Here's the wild thing is, mortgage giants raised loan limits to a record level in 2023. And what that level is, as we go right down through here, and you're going to see it, it's actually nuts. And I'm going to show you why I say nuts. I've been in the business for 30 years, and I'm going to show you how dramatically this number has increased over just the last maybe 10 years. As a result of the baseline conforming loan limits of 2023, new loan limits will be $726,200, up $79,000. What does this mean? Well, when you go out to get a mortgage, okay, most of you aren't going to have to really worry about this. But if you're going out there to get a mortgage, you can only get financing with normal mortgages, what we call conventional loans, up to $726,000 right now, in 2023, okay? That's a lot of money. All right, let's go back in history to see how much this has increased over time. Well, here's just a chart going back to 2013. I can go a little bit farther. Let's go down a little bit farther. You can go all the way down to 2010. Let's just go to 2010. From 2010 all the way through 2016, the loan limits, maximum loan limits for this program is $417,000. From 2016 to 2023, it went up from 417 to 726, a 74% increase, 74% increase in the amount of money you can get financed to buy a house if you're looking at a conventional loan. So This should help out mostly everybody out there that's looking for a house. If you are in a high balance area like New York, parts of California and so forth, now you can get over $1 million in financing, not as a jumbo loan, just as a normal loan. So that gives us some context of what's going on with the Fed, what they're going to do with mortgage rates, what's going on with some house prices and house cuts. So let's get over to the economic calendar, see what's on the agenda this week that might play some havoc on the markets. Well, we're going to go down through here, and what you're seeing right now is the manufacturing index came in kind of right in line where it was expected to. We have short-term energy outlooks, nothing there, nothing with oil inventories. And then we come through Thursday and Friday. Look at Thursday and Friday. Now, this is the one areas that we're really going to pay attention to. Why? What's the two areas that the Federal Reserve kind of has mandates to control? That is jobs, trying to keep the job market as robust as it can, and price stability, aka inflation. So what you're seeing on your screen right now is the number of initial jobless claims. How many people are losing their jobs? It was up quite a bit from the last reading, but we'll see what this reading comes in at. It was much higher than it was expected. I think the Federal Reserve is probably happy about that. What they're not happy about is wage growth, but that's another story. Then we have PPI. This is the producer price index, basically the inflation level at the producer side of the equation. That's coming out on Friday. That's the only economic news coming out, and it will play havoc on the market one way or another. So if this number comes in really high, you're going to see the markets crash. You're going to see the stock market really plummet, and you're going to see mortgage rates spike once again. If this number comes in really calm or better than expected, what you can see is a huge rally in the stock market and mortgage rates getting even better. So, the only expectations is this is probably going to come in somewhat in line. So I'm hoping that we don't really have any major changes anywhere in either of the markets that we're going to see. Right now, here's what we're seeing with the mortgage-backed securities market. This is the bond that trades on Wall Street. You're going to see it flicker on your screen. This is actually the instrument or the biggest piece of your mortgage rate. So it's the mortgage-backed security bond. It's a bond that trades on Wall Street. That's yield actually is the biggest component of your mortgage rate. Okay, so what you're seeing on your screen is the price. What's happening to the price of the bond? All right, just all you need to know is if the price goes up, rates go down. The higher the price goes up, the more rates go down, and vice versa the other way. If prices go down on your screen, you're going to see rates go up. You see the chart down there, how it's been basically just a steady free-for-all. So that's what we're kind of seeing. Mortgage rates basically doubled in the last year. But remember what I said, pay attention to this 30-year fixed rate. Look over there. And you remember I said over the last 5 recessions, every recession, the result was a 1.8% reduction in mortgage rates. Look at where we were. We were recently at 7.37 in mortgage rates. It wasn't too long ago, maybe a month or two ago. Where are we today? 6.33. So we were 100 basis points, 1 full percent down from where we were. So we are coming in the right direction. So if we can start having basically builders start giving haircuts on their house prices, driving down prices a little bit, and mortgage rates coming back into line, the expectations for next year, my long-term outlook for mortgage rates is about 5.5. So I'm expecting a little bit more reprieve here, about 0.8. So look at this. If we go back to 5.5%, and we were at 7.37%, what is that? A reduction of how much? 1.8%. What was our last 5 recessions? How much did we come down in rates? 1.8%. Interesting. Okay, so that's that. If you'd like to find out more about me and my team, what are we? Well, basically, we're mortgage advisors. If you're out there looking to build, refinance, maybe get a HELOC, maybe look to do renovations. You don't want to move. It's too expensive to move, and you like where you are and you want to just put an addition on the home or things like that, please reach out to us. We are a federally chartered mortgage advisor. I'll put it that way. How we can help you is just give us a call. Give us your scenario. Let us assist you or advise you on the best way to get a mortgage, how, what, where, and why. Okay, but if you're in the process right now, you usually see, and it's like, well, if you're in the process of getting mortgage, get 1, 2, maybe 3 quotes. Go ahead and do that. Go ahead and get your 2 quotes out there. And then what I need you to do is come back to us. Okay, we're going to do this. We offer a free service for you. We're going to look at your scenario, what the bank or the lender got you, what kind of rate, what kind of fees and everything. Then what we're going to do for you for free for free. We're going to analyze your package with over 85 of the country's largest banks and mortgage companies. Yes, we're going to do this on your behalf for free. All you need to do is go to therateupdate.com. Here's my website. You're going to go right over here. You're going to click loan estimate right here. Okay. You're going to answer just a few questions. And the biggest thing I want you to answer here is, how do you want us to get back to you? If you don't want us to call, we won't call. You know, if you want us to text you, that's all we'll do. Okay, so you're going to fill out this little questionnaire so we know a little bit about you and how to get back with you. Then what you're going to do is you're going to drag and drop your loan estimate or estimates in here. Give us about a couple hours. We're going to review that, and we're going to scan it to over 85 of the country's largest banks and mortgage companies. And then we're going to get back with you and say, hey, you did a fantastic job. Kudos. Or what we're probably going to say is, how about if we can get you lower fees and a lower rate? Well, great. Let's start moving this, and let's start working with you today. So that's what we can do for you to help you guys make sure you get the best programs, the best rates, and the lowest fees in the industry. So that's my report for today. Don't forget, we'll be back live tomorrow. Tomorrow at 5 o'clock Central Standard Time, that is 6 Eastern, with our live session with me and Kyle, answering all the first time home buyer questions that you have. Most of these events go for about 2 hours, so try to get in early so you can get your questions answered, because we go for about 2 hours and we answer questions the entire time. So that's it for today, guys. Thanks for watching. If you got value in this watching these videos, all I need you to do is do a few little things. Just give me a quick little click and subscribe down below and hit the bell. Every time I post a video, you'll get an alert. Thanks for watching, guys. God bless. Have a fantastic day. See you tomorrow. Bye-bye.